This week, all eyes are on the labor markets and PMI data. From manufacturing and service numbers to job reports and wages, these red folder events will shape where Nasdaq heads next. We start Tuesday with the ISM manufacturing PMI. Last month, it came in at 48.0, contraction territory. This time, it's forecasted at 48.9, still below 50, meaning manufacturing is shrinking, but maybe shrinking at a slower pace. Here's the play. If it prints stronger than forecasted, the Fed has less pressure to cut, and the Nasdaq trades lower. If it misses, showing weakness, Nasdaq should pop up higher. Trump once said about manufacturing reports, when factories slow, America slows, and Washington has to act. Wednesday, we get the JOLTS jobs opening. Previously at 7.62 million, now expected to cool to 7.24 million. That's a clear sign labor demand is easing. If openings surprise higher, that means that the labor market is still hot. Nasdaq down. But if it slides below expectations, confirming weakness in jobs, Nasdaq goes up as traders lean harder on Fed rate cut hopes. Jerome Powell once warned, an overheated labor market risks embedding inflation, and that's a risk we cannot ignore. Thursday is stacked. First, the ADP non-farm employment report. Last month, it came in at 104,000, but now forecasts sit at just 71,000. That's a steep slowdown in private hiring. If the number surprises to the upside, markets worry that the Fed won't cut. Nasdaq down. If it misses, Nasdaq up. Then right after, unemployment claims. The last read was 229,000, and that's exactly the forecast for this week, flat. But don't ignore this. If claims jump above forecast, signaling stress in the labor market, Nasdaq rallies. If claims fall below, showing fewer layoffs, Nasdaq pulls back. Finally, ISM Services PMI. Last printed at 50.1 and the forecast is 50.5. Services make up most of the US economy, so this matters. If it beats, that's strength. Nasdaq dips. If it slips under forecast, weakness fuels rate cut bets, Nasdaq climbs. Larry Summer once said at the service sector, when America sneezes, the world catches a cold, and services are the lung of this economy. And then we close the week with the heavyweight, Jobs Friday. This is a single report that can move every corner of the markets in seconds. Average hourly earnings were 0.3 last time, and they're forecasted to hold at 0.3 again. Wages are sticky, and sticky wages means sticky inflation. If they print hotter, the Fed's job gets harder. Nasdaq down. If they soften, traders cheer, Nasdaq up. Then the headline, non-farm payrolls, previously at 73,000, forecasted at 74,000, barely moving the needle. That's weak job creation by any standard. But here's the risk. If it smashes higher, rate cut bets gets crushed, Nasdaq tumbles. If it misses, it strengthens the case for the cuts. Nasdaq rallies. And finally, the unemployment rate, previously at 4.2%, forecasted to tick to 4.3%. A raise signals weakness. Nasdaq up. But if it surprises lower, showing that the labor market is still running hot, Nasdaq sells off hard. Jerome Powell once said, the labor market remains the key to understanding inflation, and we cannot ignore what it tells us. So here's the bottom line. Stronger jobs and PMI numbers drag the Nasdaq lower. Weaker jobs rising unemployment and softer PMI data pushes the Nasdaq higher. Looking forward, Jerome Powell is expected to cut rates in September, and the market is already leaning on his word. At the same time, Trump's tariff faced legal backlash and could unravel by October. Both forces collide into the fall, setting the stage for heightened volatility. But with every storm, there's opportunity. And traders who stay prepared can come out stronger and more profitable. As Powell said at Jackson Hole, we will proceed carefully, but we are prepared to cut if risks to the economy grow. You've been watching the Rod Report, where money meets news. Make sure you like, share your thoughts in the comment section, and subscribe to stay up to date with headlines that shape not only the markets, but your wallet. Again, thank you all for watching, and I'll see you in the next